Joining us now is Mark Mahaney from Evercore ISI. Mark, are you yet able to tell how much of this really is just about this Brazilian tax dispute? And that sounds like the kind of thing that really is a one-off and doesn't get to the fundamentals of the business. But is there something I'm missing there?
I don't think you're missing anything. I think that sounds, well, maybe missing one thing. This was a one-off. It's what, 620 million charge. And so if you adjust for that, they would have handily beaten by about 6-7% the street for operating income. And they probably would have done, I don't know, $7.30, something like that. So you would have had your kind of typical beat. Having said all that, I think the street would have looking for a little bit more revenue upside. Now, this is a subscription business, a very large subscription business. It's hard for any one kind of spurt in consumer growth or active customer growth, reduction in retention to really move the needles much in any one quarter. But still, in what is really the strongest content slate the company's probably ever had in the back half of this year, you would expect just a little bit more kind of revenue flow through. It may well be that that happens going into next year, which I think is actually what's going to happen. But that, I think that's the real context behind this, which is everybody knew they had a really strong content slate. Let's show a little bit of revenue upside. And I think the stock's already starting to come back up because people realize this is all one-time-ish, that the Brazilian charge, and they actually would have beat earnings handily if you'd adjusted for that.
Okay. So 6-7%, you say. I can't let that go. But at the same time, this is a period that we're moving into where Netflix is not reporting subscriber growth. Is there more volatility in the stock and perhaps more exposure to bad news, even if it's a one-off, because of that lack of signal that investors might be used to?
Okay, well, one, I wasn't intending the 6-7 reference, but thank you. It's and then secondly, I actually think it's probably less volatile not disclosing subs. I just think it is, and I just like a massive subscription business that beats its subs or misses its subs by a couple of 100,000, like it's less than well under 1%, and below the stock would really aggressively react to that number. So I think it actually reduces volatility to no longer disclose subs. I think they should disclose subs. Don't be, I'm going to be clear about that, but I don't think it's. I think reducing it probably does, to some level, reduce volatility. Now, what we're going to need to hear, John, on this call is let's talk about Warner. I don't think I'd be surprised if Netflix really made a push for this, but let's talk about it. I'm sure they won't talk about it directly, but let's talk about it, and then let's talk about live events, and let's talk about advertising and engagement. 3 areas we want to focus on this call.
Yeah, you took the words right out of my mouth, Mark, and that is M&A. Is Netflix in the market as a buyer potentially, whether it is Warner Brothers Discovery or something else?
I don't think so, but I think they're in the market as a bidder. The reports about them bidding on UEFA, the European League soccer football rights. Like, I think that's the next leg of growth. I think there's 2 major new legs of growth for Netflix. One is ramping up that ad revenue, and when they had that AB InBev deal, intra-quarter, like you get one of the top 20 global brand advertisers on Netflix, more are coming. The second one is getting more live events and sports content on the site. Look, Netflix is fantastically popular in North America and in other markets, 70% of the population, whatever. But you layer in a lot of popular live sports, that'll go to 80-85%. I think it's a real legitimate leg of growth, and I think every year they get more and more cash, they get more and more firepower to go and economically bid for those sports rights. So I think investors want to see some of those deals come through.
What do you think, and maybe this is over the medium to longer term, but what do you think happens to content spend at Netflix and others, especially given the comments they made about generative AI and this idea of empowering creators?
Well, I think content spend at Netflix, I think they've got a really well-worn formula that's worked for them. Keep increasing it every year, but just increase it by less than revenue grows. And, going to up it by $1 billion a year. I think in 5 years, we'll be talking about the $25 billion a year that Netflix spends on content. I think that's the right strategy. And it also just gives you more cover with which to buy, different types of rights. And that is, live sports, live events. And then on AI, look, I'm in the camp. I don't think AI is disruptive to Netflix. I think it's actually a huge win. And I just throw simple economics by people, which is, because I've had this debate with a lot of investors or discussion with a lot of investors. If you get more more content created by AI, you get more AI content creators. You're increasing the supply of people who are trying to monetize great content. How do you monetize great content? You sell it to the platform, the network that's writing the biggest checks, and that's Netflix. So I actually think you diversify your supply base. Basic economics, it's better for the network in the middle, the video entertainment network in the middle, and that's Netflix. I think it's a beneficial trend for them.